Hey friends, Lucian here with the Bullish Bears team, and I wanted to make this video on how to place an options trade. If you're not familiar with options, then make sure you head over to our website at bullishbears.com and take our free options trading course, because it'll really help you understand what I'm about to show you in this video on how to place an options trade. So I'm actually just going to show you live on what an options trade looks like, but if you're not familiar with terms such as strike price or in the money or out of the money or expiration date, it can be very confusing, but we bring it all together in our free options course over at bullishbears.com. So make sure you take our free trading course where you can learn all about options. So right now I'm using Options Express and I'm in my virtual trading account. So this is not a real trading account. It's basically playing with fake money, but just it'll show you what, how an options chain work and, how an options chain works and how to place an options trade. I just want to show you live how to place an options trade. So I'm going to launch my virtual trading account. And I'm going to go over here to quotes and options chains, and I'm going to click on that. And I'm going to put in the ticker symbol for Facebook. I'm going to click on that. And there we go. So right now you'll see I have type, calls, and puts. There's many different strategies to doing options, but just for this video, I'm just going to show you how to buy and sell, using calls and puts. The expiration I'll just leave as January 2017. I'm going to click on View Chain. So here you go. Here's the strike prices that are showing right now. These are the ones that are near the money. If I wanted to find out more, I can click more or see all of them. You'll see the last price of Facebook was $118.15. And then you'll see down here, the open interest. So these are the open contracts on the call and put side right now. Calls mean you believe that the price of Facebook would be going up. Puts mean you believe that the price of Facebook is going down. Obviously, you can see there's lots of open interest here on the $110, $115, and the $120 strike price. And you'll see over on the put side as well. There's actually more open interest on the put side over here than there is on this side over here, but then there's a lot of open interest on the call side, on the out of the money call side. Again, I haven't been charting Facebook. I am not looking to purchase Facebook for myself, so I'm not sure actually what's happening now with Facebook, but you want to be aware of these things. You want to be aware of the open interest and see why there's a lot of open interest at certain strike prices. And then today, why is Facebook have 2,500 volume today? Is that high for Facebook? Is that normal? You want to delve down and see, is the volume higher than normal, the same, is it lower? Again, you want to see what's happening. So when we always stress to make sure you properly chart your stock, whether you're buying stocks or options, especially with options, because you can get burnt really badly if you buy an option without properly charting your stock. So just for this video, I'm just going to show you how to buy a call. Again, I'm just doing it for this video, not for any particular reason because I think Facebook's going up. It's just I'm going to buy a call just to show you here. So I'm going to go to the strike price here of $115. To the left is the call side, so I'm going to click on trade over here. So you'll see $115 strike, trade button here to the left. If I'm going to buy on the call side, I would do any of these ones on the left. If I was to buy a put, I would buy from this side over here to the right. So for this video, I'm doing a $115 call. So I'm going to click right here. And you'll see on the next page an all-in-one trade ticket. And this is where I want to really stress to you the importance of make sure you double and triple check your trade ticket. So before you place any trade, make sure you check it over and over again, because it's very simple to think that you're buying a call and by accident you might be buying a put. So you might think you're buying a call and you're buying a put instead, and you'd go and you place your order and you could get really screwed. You could lose a lot of money that way. You don't want to do that. So always make sure you're double checking and triple checking what you're doing. Never rush. The emotions can get very heated when placing a trade, so you want to do your best to make sure that you think logically and look over your order before you place it. So as you can see here, I have Facebook and I have a call here. And now I want to do an action. There's several different things you can do when purchasing an option. You can buy to open, buy to close, sell to open, and sell to close. When you're just buying a call and a put, you would buy to open. Again, there's other strategies that you can do with buying to close or selling to open. But for the sake of just buying calls and puts, you would buy to open. Just remember that. It's very important. Buy to open, and if you were to sell a position that you had, so if you owned a call or put on Facebook, you would sell to close. So it's buy to open and sell to close. Everything else is a completely different strategy. So buy to open, and then next you'll see quantity. This is the amount of contracts that you're looking to buy. So this right here has one contract. Now the equivalent of one contract is the equivalent of 100 shares. If you took our free options course, you'll realize that each options contract is the equivalent to 100 shares. So if you want to buy multiple contracts, you would take the amount times 100 times the amount. So basically, if I was to buy 5 contracts, it would be 5 times 100. If I was to buy 10 contracts, it would be 10 times 100. So the quantity is the amount of contracts. So this right here is 100. If I change that to 5, it would be 500. And what you would do is you would multiply it times the price that you see to the right. So right now the ask price is $2.48, but that's times 100. So 248 times 100 would be $248. And if I had 5 here, that would be times 5. So if I bought it, and as you can see, the ask price is changing because this is during market hours. So this kind of shows you live what's actually happening. The price could drop and you can get a lower price than you want to get in on it, but it could also go higher. You can see it's moving up right now. So that's where you always want to be careful and double and triple check your orders. So for the purposes of this video, I'm going to buy 5, right? So you'll see $2.47 times 100 times 5, and that would be my total order. Now, I usually always recommend trying to get a discount, so don't ever rush to buy an option or a stock. Try bidding. So right now, if I put in at 247, I can get it filled, unless the market changed really quickly. But try putting it in at 245 and then adjust your way up, and usually you can settle somewhere in the middle price here. But try getting it lower and see if you can get more of a discount. And then if it doesn't fill within a couple minutes, you could always adjust and move up until your order fills. Again, so you'll see the strike or the month expiration right here of January 2017. And you'll see here that it moved over to a $118 strike. See, this is where you want to really be careful, because I just clicked on $115 before. And I don't know if this is because it's my virtual trading account that it did this, but I'm going to click on $115. See, I didn't see the difference in price too. There's a huge difference in price. It was almost double the price here for the $115 one because I went more on the money. But that's a perfect example of why you want to make sure that you're always checking your order. See, I'm doing this video here, and that could have just slipped my mind, or maybe I was thinking about something when I'm going to place my trade. Again, emotions always get in your way, and that can change. That could completely change your strategy. So this is perfect that this happened when I'm making this video, because this is something very simple that could be very costly. And as you see, the price of that option almost doubled. So for the purpose of this video, like I said, I'm going to do 115 strike. That's what I wanted to do. And I'm going to buy a call. So, again, just make sure that it didn't say put, because if it said put, it's a different strategy. So call side again. And then market means I'm going to buy it at market price. So if I sent the order out, if Facebook moves really quickly, then it might be paying more than I want to pay for it. So I don't suggest, buying something at market price unless you really want to get on it really quickly and it's moving up. Or if you really need to sell something ASAP to get out of a position, then maybe you do market price. But we usually like to suggest doing limit orders, because in a limit order, you can put in the exact amount that you want to buy or sell at. And, that way you can adjust up and control what you're doing. So right now it says 445 for the ask price for Facebook. Like I said, I would put it in at probably 435 and then adjust it in, a few cent increments until it goes up. And chances are I'd probably be able to settle somewhere around 440, but try to buy a discount, And the duration is day order or good to cancel. Day order means that I want that order to fill today. So if Facebook drops to the 435 anytime today, it would fill. It might take a few hours. Or if I put good till cancel, that could be anytime for the next few months. If Facebook drops down to that price, then it would fill. But again, it's the $4.35 times 100 times the quantity of 5. So when I do that order, you'll see, again, double and triple check your order, make sure it's correct again. So it's another screen, because right now, if I was to place that order, it's going out. So you want to, again, look and see buy to open. You'll see 5 contracts of Facebook with the expiration of January 2017. $115 strike price, not the $118. Again, make sure when you're doing your stock, if you wanted the $115, make sure you're buying the $115 and not something else, because again, the price changes. You'll see the limit order of $4.35. And I have this as good to cancel, but I'm going to go back and I'm going to change that until today because I want it to fill today. So I'm going to preview it again. See how you can go back and just cancel and edit the order? That's how simple it is. So you'll see the total price for this would be $2,175 plus the $14.95 commission fee. And if I wanted to buy this, I would place this in my virtual trading account. And that would be it. So the order would go out, and then if it, if Facebook dropped down to the $4.35 contract, it would fill. If not, I would go back in and edit it in, maybe 4 or 5 cent increments until it gets filled, and it would be somewhere usually in the middle if you go back over here. So I'll cancel that. So you'd probably fill somewhere in this area right here. So that's for buying Facebook. If I owned those contracts of Facebook and I wanted to sell, now I'd be looking to sell at the $4.35 amount, which would be the bid. But obviously, I want to try and sell for more, so I'd put an order out maybe for $4.45 and then adjust down. And as you can see, it just dropped again in price. So you want to sell more, for a higher price, ideally. Because you want to make more of a profit, and you can always adjust and go downwards. Again, you want to make sure you control your emotions and never just rush to do anything. So, well, you can see here this, the ask price drop. So I'll just put it at $4.40 for right now. And see here, look what I did. It says buy to open, right? See, this is where you always want to double check your order. I want to sell to close at this point because I own a position of Facebook. Actually, technically I don't right now, but I want to show you what happens on the next screen. So it's buy to open when you're buying a call or buying a put, and it's sell to close when you're selling your call and selling your put. So right here, again, I'm going to double check here, and I can see sell to close. I own the 5 contracts of Facebook. Now I'm going to preview and sell it. Well, I don't have that position right now because I didn't place that order before, so this is good. It gives me an error that I don't have this position. But you'll see what happens. If I did own this position, it'll say sell to close, 5 contracts of Facebook, January 2017, $115 call, and then that would be the limit order and for the day. So then my estimated order would be $2,200 minus the $14.95 commission, and that would be the total, $2,185.05. And then I would place the order if I owned it. And if it didn't fill, then I would adjust. So if I put it at the $4.40 and it didn't fill, I would adjust in 5 cent increments down, let's say, until it filled. Ideally, I want to sell it for more than $4.30, but if I can't and it doesn't move, then maybe I'd settle somewhere in the middle. So that's how buying and selling options work. If you're just doing a simple buying and selling of a call or a put, it's buy to open and sell to close. Just really remember that. And again, just always double and triple check your orders before you place them. If you